Alright, so what are we going to do with the revaluation surplus that we have previously recognized in other comprehensive income and accumulated in equity, okay, under asset revaluation reserve account, okay? So this amount that we have accumulated, okay, we can actually credit some amount, okay, to the retained earnings, okay. So when can we credit this amount from the asset revaluation reserve to the retained earnings? When the revaluation surplus is realized, all right. The good thing that when we are able to transfer some portion of revaluation surplus from the asset revaluation reserve account to the retained earnings is that, okay, we can distribute the earnings, okay, we can distribute the amount to the shareholder, okay, as a dividend, right? Okay, so under which situation the revaluation surplus is realized? There are two situations actually. The first one is throughout the period when the revalued asset is used by the entity. Throughout the period, okay, throughout the period that you use the asset. So we are able to credit some amount from the revaluation surplus and then transfer to the retained earnings. All right. And then the next one is on disposal or retirement of the revalued asset. On disposal meaning that when you dispose or when you de-recognize the asset, okay, the revalued asset, okay, any accounts that relate to the disposed asset, okay, including the asset revaluation reserve, okay, will be removed, will be closed, all right. And then the balances of asset revaluation reserve will be transferred to retained earnings, right? Okay, so for the first situation, how do we transfer, okay, from asset revaluation reserve to the retained earnings? Okay, and then how much, okay, to be transferred? All right, so how to transfer? Okay, is where you prepare the journal entry, debit. Okay, the treatment would be to reduce ARR, all right, and then to increase retained earnings. Okay, so how do we do that? We are going to debit. Okay, for both situations, okay, for both situations, we are going to debit ARR, and then we are going to credit retained earnings. Okay, we are going to reduce our ARR account to increase the retained earnings account. Okay, so for the first situation, throughout the period, so how much should we transfer? Okay, how much should we transfer? Do we transfer all the balance in the asset revaluation reserve account to the retained earnings? No. Okay, the amount transferred is limited to the difference between the depreciation based on the revalued amount and the original cost. The difference between the depreciation, the original depreciation, and also the revalued amount depreciation. Okay, the difference that we transfer to the retained earnings. We are going to take out from ARR and then transfer to retained earnings. Okay. For disposal or retirement, okay, there shouldn't be any problem. Any amount remaining, any balance, okay, in the asset revaluation reserve account is to be credited to the retained earnings upon the recognition of the revalued asset. Okay. All right. Okay, so let's look at one example here. Okay, in the previous example, 3.2, we have discussed on the revaluation of building. Okay, in the discussion, okay, there is a revaluation of the building made in year 2000, in year 2016. All right, in year 2016. Okay, all right. The original cost of the asset is 12 million. All right, and the revalue amount, which is the fair value on the date of revaluation, is 15 million. Okay, and the revaluation was made after 5 years. All right. So the policy of the company is to transfer any surplus on revaluation, okay, to transfer any surplus or revaluation realized, okay, to the retained earnings. Okay, to transfer any surplus or revaluation realized to the retained earnings. Okay, right. But how much to transfer? Okay, to transfer, to calculate, okay, the amount to be transferred from ARR to retained earning is, okay, to find the difference between the original depreciation and also depreciation after revaluation. Okay, from the for the original depreciation, the cost is 12 million divided by the estimated useful life at that time, which is 30 years. The original depreciation is 400,000. After the revaluation, we are going to take the revalued amount, the new gross carrying amount, which is 15 million, divided by the remaining useful life, which is 25 years. Okay, therefore, depreciation after revaluation is 600,000. Hence, the amount transferred from ARR to retained earning is equal to 200,000, which is the difference between 600,000 and 400,000. Or another way to calculate, okay, the amount to be transferred is, okay, to take the balance, okay, or to take the amount of surplus, okay, which is 5 million, divided by the remaining useful life, which is 25 years. Therefore, the amount to be transferred from ARR to retained earnings is 200,000. It should be the same. Okay, regardless of the way you compute the difference, okay, it will be the same. All right. Okay. Therefore, from year 2016 and onwards, okay, until the next revaluation, or if there is no revaluation, then we are going to do this process of transferring from ARR to retained earnings. Okay, we are going to do this until, okay, end of its estimated useful life. Okay, unless there is another revaluation. Okay, so for now, from year 2016 and onwards, okay, every year we are going to transfer from ARR to retained earnings. What will be the journal entry? To debit asset revaluation reserve and then to credit retained earnings. For this question, for this example, the amount is 200,000. All right. Okay, so that's all the discussion for revaluation surplus realized.